I'm very excited here today because I am looking at a couple good opportunities here in the market. Hopefully we'll have some time. I'll be able to show you a couple of these here today. I'll at least be able to show you one or two. I'm also going to teach you a trading strategy here today. Basically my goal here today is in the next 45 minutes, I'm going to help get you up to speed. If you've had any interest in being a Forex trader, I'm going to help put the tools in your hands here today so that literally at the end of the webinar you have everything that you need so that on Sunday when the market opens up again after this weekend, you have a trading strategy, you'll have some tools in your hands, and you'll be able to actually start trading in this market. Now before we begin, a quick disclaimer, because we are about to go into the charts, I am going to show you, to teach you a trading strategy. I'm also going to show you at least one opportunity that I'm looking at in the market, but I want to make sure that everybody that does understand that you shouldn't take this as actual investment advice. Like I said, I'm going to walk you through several trade examples, show you some trades I'm looking at, but ultimately, when it does come time trade, that decision to make that trade is going to be yours and yours alone. So just to set the proper agenda, what we're going to be going over here in the next 45 minutes, I'm going to get you up to speed on the Forex market here today. If you've been here since the beginning of the webinar, beginning of Investor Inspiration here this morning, I know my colleague Joe Cavallero, he probably went over some of this. So I'm not going to spend a lot of time going over a lot of the Forex market. I'm just going to go over some of the basics to help get you up to speed very quickly. We're going to pull up the charts here in just a moment. We're going to do some analysis, show you how we do analysis in the markets here. Thankfully, Don that was here before me, he went over a lot of the Fibonacci, so I'm not going to go in and go over a lot of that here. But I'm also going to show you some of the automated tools that are built into our charting platform that does Fibonacci's, trend lines, support and resistance is going to do that all automatically for us. Like I said, I am looking at 4 trade opportunities in the market right now. I'm going to show you at least one in just a moment here. If you stick with me at the end of the webinar, I'll show you at least one more here. I'm actually in one trade right now. We'll show you some of these opportunities that are going on right now. I'm also going to take you in. I'm actually going to teach you the London Daybreak trading strategy. Very simple trading strategy that was taught to me by one of our analysts here. His name is Josh Martinez. I'll introduce you to him here in just a second. Literally, you'll be able to start doing this trading strategy here on Sunday when the market opens, but also I'm going to show you how Josh is actually going to teach you and show you how to do this trading strategy as well. Now, I'm also going to show you how to set up a demo or trading account. So you can literally practice trading with Play Money, and also show you how you can get the charting software. I get some free bonuses here today. So before we get started, I get asked this question each and every time. Everything I'm going to show you here today, you're going to be actually going to take a trial of. It's not going to have to go through a full education. You're not going to have to spend a lot of money doing it. In fact, actually, I'm showing you everything here today. You'll be able to take it for a trial here today for only the cost of what a pack of gum costs here today. So if you've been interested in trying out our software, learning this trading strategy, like I said, for less than the cost of a pack of gum, you'll be able to do that here today. As Renee just said here, a little bit about my background. Before we jump into this, I have been trading in the investment market since 1998. Mostly been a stock and options trader. It has only been the last several years because of Market Traders Institute I got into the Forex market as well. In fact, everything that I'm teaching you here today about the Forex market, I actually learned from Market Traders Institute. I am actually a full-time trader, and as I said, I am also a student of Market Traders Institute. So I've actually gone through the education here today, and the neat thing about it is that they then started asking me to go out and start teaching new people. I get new people up to speed very quickly so they can start trading in the Forex market as well. Those of you that may have missed Joe earlier here today, a little bit about Market Traders Institute. We are located in Orlando, Florida, probably about 10 to 15 minutes north of Walt Disney World. The building you see on your screen, that's actually our building. I'm actually broadcasting out of that building here today. It is a 70,000 trading and training facility. You can literally come to our facility, get trained live in person right in our classrooms here. The neat thing about Market Traders Institute, we've been around for about 22 going on 23 years now. We have been getting some accolades and have been getting some press. In fact, actually, not only last year were we featured in Inc. 5000's fastest growing private companies. Last year, Market Traders Institute was ranked 1,180. This year, we are actually moved up a little bit to 592. As you see in the letter here, I mentioned the same breath as Zappos, Under Armour, Microsoft, just to name a few of the companies. And the only reason this continues is if we keep helping our students achieve the results I'm going to show you here today in this market. Before we jump in, not only does Market Traders Institute have some of the best education, we also have some of the best analysts and teachers here. As I mentioned, one of them, his name is Joshua Martinez. Josh is the creator of the London trading strategy, the London Daybreak trading strategy I'm going to show you here today. But a little bit about his background here. He has trained thousands of Forex investors. He actually started off with an initial deposit of $500 in his trading account, and he was able to generate over $39,000 in profit from that initial investment. He has made thousands and thousands of Forex investments. He's a published author, international speaker. He is a full-time trader. Now, before we jump in, I know some of you are probably wondering, well, this is all great. Well, what kind of results is Josh getting? This is actually his trading account here from my FX books. This is a third-party verified system here. You can see for this year. Since February, he's up about 31%, and he's up about 25,000, over 25,000 pips just this year alone. So just a little bit of the background about Josh here, the type of results he's getting in this market, the type of education we provide to our students here. Once again, this is all third-party verified. So what I'm going to do, I have a little bit of an idea of who I am, Josh to be the gentleman. I'm going to show you here in a little while how you can actually get trained by him in an education series here. I'll explain that in just a second. But what I want to do is before we pull up the charts and jump into this, let me get an idea of everybody's Forex trading experience here. So if everybody in the room here, we have about 150 of you here in the room. If everybody could quickly look at the screen, let me get an idea of what your trading experience is before we jump in here. If you're brand new to the Forex market, you have no experience in this market whatsoever, please type the number 1 in. That's going to let me know you're brand new, you have no experience whatsoever. If you do have a little bit of experience in this market, go ahead and type the number 2 in. Maybe you're trading a practice or demo account, maybe you've been to a couple of seminars. Number 3 is for my experienced Forex traders, those of you that are trading live with live money here. So, okay, yeah, that's pretty much what I assumed here. I'm getting all 1s and 2s here. I did get one number 3 here, Ron's a number 3, but it looks like everybody else is a 1 and 2. Don't worry. Before we pull up the charts, I'm going to give you a quick Cliff Notes version here, an overview of what the Forex market is and what we actually do in the market, and then we'll go over some of the basics on how we trade this market. Now, first of all, we're going to go over what is the Forex market. I'm going to explain to you what you're going to be doing when you're trading Forex currencies. I'm going to explain to you what a pip is. I'm going to explain to you how we capture pips and why you want to capture them. More importantly, though, I'm actually going to go in today, show you how you can get started literally at the end of this webinar, show you how you can actually get started trading in this market. So quick overview of what the Forex market is. It is the largest financial market. There's over $5 trillion that is daily traded in this market. So what that means is that there's a ton of potential in this market, just to get a fraction of that. One more other thing you need to know about the Forex market is that it is a very flexible market. Unlike the stock market, which is traded during the day, you have the Forex market. It is traded pretty much 24 hours a day. It's going to open up on Sunday at 5 o'clock p.m. Eastern Time, and then it closes at 5 o'clock p.m. on Friday. Now, the neat thing about the Forex market, and this is something you're going to need to know about because we're going to go into this and explain to this as part of the London Daybreak trading strategy, is that there are 3 major trading sessions that happen in this market. You have the Asian trading session, you have the London trading session, and you have the U.S. trading session. Now, what happens is that these trading sessions, they overlap. So what that does is that allows you to trade this market, like I said, literally from 5 o'clock p.m. Eastern Time on Sunday through 5 o'clock p.m. on Friday. Now, these overlaps in this market, it's going to come in key here in just a second. I'll go into a little more detail and explain to you here in just a second what I mean by that. One of the things I also want to do is I also want to explain to you that unlike the stock market, where there's thousands and thousands of stocks that you can watch and trade, in the Forex market, there's really only about 60 currency pairs that you can trade. The neat thing about this is that through our experience, over almost 23 years of experience in trading this market, MTI is going to show you which ones to pay the most attention to, but we're also going to teach you the secrets to trading them. In fact, actually, I focus on about 18 currency pairs. When I pull my charts up, you'll see here exactly which currency pairs those are, and so I kind of focus just on 18 of them. So in the stock market, there's over 40,000 different stocks you can trade. Allows you to focus on individual currency pairs, makes it a little bit easier to trade in this market. So one of the things I also explained to everybody is when I pull up my charts here, I'm going to be utilizing what's called a candlestick chart. Basically, you're going to see something very similar to what you're looking at here. While we're looking at a candlestick chart, what we're going to be doing with this chart is we're going to be trading one country's currency against another. In this case here on this chart that I have pulled up, if you look in the upper left-hand corner of my screen, you're going to see that this is the Great British Pound, GBP, US dollar currency pair. So in essence, what we're doing on this chart right here is we're trading the British pound versus the dollar in an attempt to figure out which one's going to gain in value against the other. Now, as I mentioned, these little rectangles here, these are called Japanese candlesticks. If you've never heard of a candlestick chart, that's what you're looking at right here. Now, these Japanese candlesticks, the neat thing about this is that very, very simple, easy to learn. All you really need to know about as far as this presentation goes is that each one of these candlesticks is going to represent what the market has done in whatever time frame you select on your chart. So in this case here, you can see that this is a 1 hour chart. That means that each one of these candlesticks, it's going to represent what the market has done during that 1 hour time frame. Now, without going into a lot of details here, all you really need to know is that the white candlesticks mean the market is going up. It's also called a bullish candlestick. The dark blue candlesticks mean that the market went down and ultimately closed out down during that 1 hour time frame. It's also called a bearish candlestick. One more quick thing you need to know before we jump in. These candlesticks, they form what are called candlestick formations. We teach our students to look for these candlestick formations because they're considered the sign language of the market. They help to tell the trader a story. In fact, this one right here at the bottom of your screen, this one's circled, this one's called a Morningstar candlestick formation. What it's telling the trader is to look for this market to U-turn and go upward in a bullish movement. This candlestick formation at the top of the screen is called an Evening Star candlestick formation. What it's telling the trader is to look for this market to U-turn and go downward in a bearish movement here. If we go through the market here, I'll try to point some of these out as we're going along, but when you go through our full education, we teach you all of this in much greater detail. Now, ultimately, our goal in this market here is to capture what are called PIPs. Now, PIP is an acronym. It stands for Price Interest Point. Now, very simply here, I'm willing to bet that most, if not all of you here in the room, you probably already know that there are 100 pennies in a US dollar. So a penny, it represents 1/100th of a US dollar. If we were looking for a unit of measure that is smaller than a penny, it would be the equivalent to what is called a pip. Now, just as there are 100 pennies in a US dollar, there are 100 pips in a US penny. So a pip, it represents 1/100th of a penny, and it's represented by these 2 decimal points after the penny. So if you look at this number here, the first 2 decimal points are your pennies. These 2 decimal points after the pennies here, these are your pips. And right there is a singular pip right there. So what we're looking to do is we're looking to capture pips. So let's go in here and let me show you how we go about capturing these pips. In fact, what I want to do is I want to start off, since a lot of you are brand new here, let's break this down to the very simplest form of what a currency transaction is here. In fact, most of you have probably been to one of these currency exchange kiosks here. So let's give an example here. Let me show you here a quick example before we actually go into the charts and show you how we do this all with technicals here. But let's say that we are here in the United States and we're looking to go to Canada for the day. Maybe in the morning we go to one of these kiosks and we see that the US dollar Canadian exchange rate is 1.32. So what that means is that 1 US dollar is going to be equal to 0.32 Canadian dollars. So very simply, if we were to exchange 1,000 US dollars, we would get back 1,320 Canadian dollars. So very simply right there, if you were to break the Forex market down, the currency market down to its very simplest basis right there, you just did your first currency transaction right there. We just exchanged our US dollars for Canadian dollars here. Now let's say at the end of the day, we come back from Canada into the United States. In the morning, the US dollar Canadian exchange rate was 1.32. Let's say in the evening, let's say that that goes up to 1.33. For what that means then is that our 1,000 US dollars is now worth 1,330 Canadian dollars. So when we exchange this back, our 1,000 US dollars are now worth $1,010 here. So very simply here, what all that means is that we just made a $10 profit off of that currency transaction right there. Very simple. So we just exchange our money in the morning, our US dollars for Canadian dollars in the morning, and then in the evening we just exchange them back and we just made $10 back off of that here. Now in the Forex market, that 1 penny move from 132 to 133, that 1 penny move is going to be worth 100 pips. Once again, kind of showed you how that works here. So essentially what we did is we just did a 100 pip move right there. Now very simply here, In the Forex market, what is that 100 pips worth here? Well, one more thing you need to know if you're taking notes, in the Forex market, you utilize what is called leverage in this market. Now, the leverage is provided by your broker. This is going to allow you to place your trades and to generate a leveraged return on the pips. In the Forex market, there's three basic lot sizes here. We trade in lots. There's what's called a micro lot. Now, a micro lot, it's about a $20 investment from your trading account. With a micro lot trading account, if you're trading with a micro lot, each pip that you capture, it's going to be worth 10 cents. So that 100 pips that you just captured, you'll be worth $10. 10 cents times 100 pips, $10. So you have made a $10 profit trading a micro lot. Now on a mini lot, if you're trading a mini lot account, it's about a $200 investment from your trading account. And what your broker is going to do, your broker is going to borrow this investment size. It's going to allow you to place the trade and to generate the pips. Now in this case here with a mini lot account, each pip now is going to be worth $1. So if you capture 100 pips, you generate a $100 profit off of that trade here. Now a standard lot is the standard by which most traders strive to achieve in this market. A standard lot's about a $2,000 investment from your trading account. Each pip is now worth $10. So going back to that 100 pip example, at $10 per pip with a standard lot, you just generate a profit of $1,000 off of those 100 pips. Now, our goal here with Market Traders Institute, in fact, we're even going to take this one step further. I'm going to show you how to start trading with a demo account, start trading with play money here. So you get up to speed, you fund your trading account to a micro lot size. Now we kind of refer to a micro lot as crawling. We'll get you up to speed in this market, start off crawling in this market, then you'll get to the point where you start walking in this market trading a mini lot account, and then we'll help build that up to the point where you get to a standard lot trading account, and we call this running here. So we'll get to the point where you start crawling, you start walking, and then you actually start running in this market, start making some serious results in this market, some serious profits in this market here. So what we're going to do is I'm going to go in right now. You now have the basis down. We just taken about 15 minutes or so, gone over all the basics right now. Let's go in, let's start talking about how we go about capturing those pips here. So what I'm going to do is I'm going to go in here in just a second. I'm going to teach you the London Daybreak trading strategy. This is a very simple trading strategy that you can literally start utilizing on Sunday. When the markets close over the weekend, Sunday they'll open, and then I'm going to show you how you can actually start using this trading strategy on Monday here. So let's go ahead, let's go in right now. Before we do, let's go ahead, let's pull up our charts. And everybody right now, you should see a chart on your screen. What I'm going to do is I'm going to go in, I'm actually going to show you this current trading opportunity that I'm looking at taking right here. I'm going to show you this opportunity, get you to the point here, and we're going to do some basic analysis here. Show you how some of the analysis and different strategies of how we teach our students here. But then I'm going to show you that London Daybreak trading strategy that you're going to be able to just simply just jump right in and start doing this right out of the gate here. So what I'm looking at right here, I'm looking at, once again, the upper left-hand corner of my screen up here, this is the Great British Pound, GBP, Australian dollar, AUD currency pair. So essentially what I'm looking at here is I'm looking at trading the pound, the Great British Pound versus the Australian dollar, the Aussie here. Now I'm going to come in here, I'm going to show you why I'm looking at buying this market right here. What I'm looking for is I'm looking for the market to pull back, bounce off the backside of this trend line, and then go up here. But what I'm going to do is I know I have a lot of ones and twos here. A lot of you are probably looking at this chart saying, well, I have no idea what I'm looking at here. Don't worry. Let's back this up. Let me show you how I got to the point where I am right now, and then we'll go in so you have a better understanding of how this all works here. So let's back this up a little bit here. And let's go over some basics here. I know some of the other presenters here, they probably have shown you Fibonacci's and that sort of thing, but what I'm going to do is I'm going to back this up a little bit here, and we'll do a quick recap and show you some different trading strategies here. So what I've already done here is I've backed this up right here, and this line right here, this is called a trend line. We refer to this as a trend line. What this trend line is going to do is going to help us take some of the fear out of the market, help us to determine one of the three things we need to know in this market. If you're taking notes, what you're going to need to know, number one, is where is the market going? Question number one, you need to know where the market is going. Obviously, you can't predict 100% of the time where the market's going, but what you need to do is develop an educated opinion as to which way you think it's going here. So what I've done here is I drew this trend line coming down right here, and below this trend line is what we refer to as our sell zone. Meaning that when the market's below this trend line going down, we're going to be selling the market. When it breaks above this trend line, we're now in the buy zone. I'm going to be looking for buying opportunities above this trend line here. So what has happened here is the market came down, U-turn broke right above that trend line here. So we're now in the buy zone. We now have that educated opinion. We believe the market's going to be going up. Now, there are two other questions we need to answer. We just simply can't just jump into the market. We need to determine, number two, where and why to get into the market, and number three, where and why to get out. Before we even place the trade, I'm going to show you some trading strategies here to determine this here. So those are three questions we need to answer before we get into the market. So let's go ahead, let's back this up. We obviously just can't just jump into the market. So here's what we're going to do. Let's back this up to the beginning of this new trend right here. The market came down. In fact, let me zoom in here just a little bit more. Let's back this up right about there. So right here is the beginning of this new trend. This is where we're going to start off, the beginning of the new trend. What we need to determine now is we need to determine what's called our A to B boundary here. Now, very simply here, to determine the A boundary, this candlestick wick right here is our lowest point at the beginning of this new trend. That's going to be our A point. Now, why is that our A point? We have two candles to the left, two to the right, which are higher than that low point. So this is also what's referred to as a proper low. So that's going to be our A point. And then the market rallies up to this point right there. This is going to be our B point. Now, why is this our B point? Because this candlestick wick right here is what's called a proper high. It has two candles to the left, two to the right, which are lower. Now, the reason we're looking for this A and B point right here is this is also referred to as what's called our A to B boundary. Let me explain to you why we're looking for this A to B boundary. I think it's already been discussed here before, but what we have found in the market is the market tends to move in waves. As the market's going up, it's going to go like this. When it's going up, it's going to be going A. We're looking for an A, B, C, D pattern. I think Don, he's already gone over this, so probably most of you probably already understand how this works here, and you're probably already going to understand exactly why we're looking for this A to B, this boundary here. We're looking for, this A to B boundary because we can then come in and we can use what's called our Fibonacci tool. I think it's already been discussed what the Fibonacci tool does, but let me just go ahead and explain to everybody here how this kind of works. When we find this A to B boundary, we spread our Fibonacci tool between the A and the B, just like that. Now, what we have done here with our Fibonacci tool is we have it color coordinated. These lines between the A and B boundaries, these are called retracement lines. The reason for this is because we have found that in between this A and B boundary, there's a high probability of a pullback. Now, what we're going to be looking for is the market to pull back and form this C point. We're looking for a U-turn on the market to form this C. This C point is going to help us to determine where our D point is going to be based on our Fibonacci. So let's bring this down here just a little bit here. So basically, if the market goes A, B, pulls back and forms a C point at one of these red retracement lines, we're going to be looking for our D point at the red extension, like a buddy system, red to red, and then it goes blue to blue and green to green, just like that here. So based on where the market pulls back, we're going to be looking for it to find our D point. So based on where the market's been, it's going to help us predict where the market's going. In fact, my colleague here, Joe Cavallaro, refers to these as springboards. Depending on how the market pulls back, we're looking at how high it's going to be going up. And the same thing happens when the market's going down. When the market's going down, we're going to be looking for those same A, B, C, and D swings just like that. And once we determine that A to B boundary downward, we can come in here with our Fibonacci tool and we spread it as it's going down. And the same thing applies as it's going down, A, B, C, D, just like that. If we get a red retracement pullback when it's going down, we're looking for the D at the red. It goes to blue and green to green. So very simply here, we try to make it very easy to understand, like a buddy system. You can match colors, then you can help to determine where the market's going to be extending to. Once again, between the A and B boundary, these are retracements, And what we're looking for is the market to retrace and then extend. So these are our extension lines above there here. So let's come in here. Let me show you how this quickly applies to the market here. Now with our pound Aussie here, in fact, let me delete some of this, get that out of the way. Now I'm going to show you an example of this, how this actually works in the market. We also have a tool that does all this automatically as well. So just stick with me here, I'll demonstrate that for you as well. So here's our A to B boundary. Let me delete some of this here as well. And in between that A and B boundary, we can come in here and spread our Fibonacci tool from the A to the B. Now what happens is that in between that A and B, we have a pullback. The market pulls back right here. It pulls back, U-turns, and gives me this candlestick formation right here. As I told you, these candlestick formations, the sign language of the market, helping to tell us a story. This is what's called an engulfing bullish candlestick, telling me, hey, look for this market to U-turn and go upward in a bullish movement. Another thing we teach our students here on how to use is what's called a counter trend line. So we're going to come in here and draw a counter trend line just like that. You can see here the market pulls back and breaks our counter trend line. So I'd be looking to buy into this market right here. So there would be my entry here. So that's going to help us determine question number 2. Let's pull this back down here. And let's put this, we'll put this over here. So we now have answered question number 1. We have an educated opinion. We believe the market's going up. Question number 2, where and why to get in. Candlestick formation, counter trend line break. We're looking to buy into the market right there. There's our signal of a U-turn in this market. So this would then be our C point right here. So at this point, the C point is at a red retracement level. So what this is telling me then, if I buy into the market to close that candlestick, I'm going to be looking to exit my position right there at that red extension. That's where my D is. Once again, red to red. So this is very simple. Just breaking this down very simply for everybody here. We have our A, B, C, D. So here's what happens here. If we buy into the market right there, and the market eventually does rally up, and then bam, right there, it hits our D extension. Now, if we had bought into the market right there, at the close of that candlestick, and we exit at the D point, our extension here, that was 232 pips off of that trade right there. And that was in about 5 days of trading right there. 5 days of trading at 223 pips here. Now, what's going to happen now is that this cycle has been completed. We have an A, B, C, D swing. This C point now, the deepest point of retracement, now becomes our new A. And what we're looking for is a new proper high up here. We're looking for the new B point up here. So probably, I'm guessing probably that might be our B point right here. But here's the neat thing about all this. The neat thing about all this is that I just showed you the manual way of doing this here. If we were to do this, we would have to run our Fibonacci's the whole way up, going A, B, C, D, A, B, C, D, A, B, C, D as it's going up. So here's the neat thing about this. Let's delete all this. We'll delete that. In fact, let's clean up our charts right here. And the neat thing about this is I'm going to show you some of these automated tools here. We have an auto Fibonacci tool. And we also have an auto trendline tool. So very simply here, we come here to the beginning of this new point, beginning of this new upward swing. We can simply come in here with our smart Fibonacci tool, and we simply, draw our Fibonacci's quickly and accurately the whole way up. And we can also come up to the beginning of this new trend. We can use our smart trendline tool, and it's going to draw our trend line automatically for us as it's going up here. So what we do is we would have had one A, B, C, D swing. There was our next A, B, C point. Once again, candlestick formation. You might recognize this candlestick formation right there. Morningstar candlestick formation, and we would have had a counter trendline break. Just like that. And we probably would have bought it in the market right there. And then we had another A, B, C, D swing. And I think this brings us, actually brings us up here to the beginning of the new trend here. So what happened here, and this is one of the things we'll teach you as you're going along, if we don't get a pullback to the first red retracement level, we look for the market to come up and then pull back, and here's what ended up happening. The market ended up coming up, pull back, didn't really give us an entry here. You might have been able to get in right here, but that's a pretty shallow retracement, but if you go by our teaching here, you probably wouldn't have gone in, and what happens right here is then the market now breaks our trend line, and the market's now going down. So we would then be in a new down looking for opportunities to sell the market. So let's go ahead, let's quickly bring this to the live market. I don't want to spend a lot of time going into depth about teaching all this. Those of you that want to learn how to do all this in much greater detail, we can teach you in our full education. I just want to kind of give you an idea why I'm looking at this being a current opportunity to trade this market. So as we come in here, in fact, actually, if we draw our trend line once again, these are smart trend lines, our smart Fibonacci tool, and we would have had one ABCD swing, two ABCD swings. Here's our third ABCD, and then there's a fourth, and then this brings us now to the current live market, which is right here. So here's our current A to B boundary here. Now what has happened within the last 4 hours, you can see here the market now has broken above that trend line. So what I'm now looking for is I'm now looking for buying opportunities on this. I'm going to zoom in here. Let's zoom in here. In fact, let's delete all this. And we come in here to the beginning of that low point. There's our low point right there. I can come in here and draw my smart Fibonacci tool right there. So here's our current A, B. In fact, I can zoom in nice and tight on this. There's our A, B, and there's our C point. So we're looking right now is for the market to come up right there to our D point here. So we've already kind of missed out on 1, 2 opportunities. Right here would have been an opportunity to get in, buying the market about 4 or 6 hours ago. That would have been 89 pips. But let's go back in here. In fact, I need to go back and redraw my trend line. I'm going to show you why I'm looking at this as being a current opportunity. Then we'll come in and we'll do that London Daybreak trading strategy as well. Something that does all this, makes this a little bit more simpler here. So we go back up here to the beginning of that new trend. There we go. Let's come back up here, draw the smart trend line. There we go. Zoom in. And so what I'm looking, in fact, I'm going to go ahead and extend this. So what I'm ultimately looking for is I'm looking for the market to come up. It's probably either going to bounce off the back of this trend line and then go up. So this might be a buying opportunity right here, or it might come up and hit our extension and then pull back again, and then we can start trading this in waves as it's going up here. So I'm kind of looking for the market to pull back. It's probably not going to happen. It's what, almost 4 o'clock here today. This might not happen today, but I'm going to be looking to start trading this up as it's going here. Or what I can do is I can wait for it to come up here and hit our extension, and then we would have a new AB just like that, and I'd look for the market to pull back to our red retracement level, at least our 382, and then look for a buying opportunity right there. So probably not going to happen today, but I'm just kind of showing you here what I'm looking at here on the pound Aussie here. Now, a couple of other neat features before we jump into the London Daybreak trading strategy here. Somebody just asked a question about, do we have to sit in front of our charts as far as watching these opportunities? Like, for instance, right here, I didn't have to wait in front of my charts to wait to see for this to cross and break above this trend line. One of the neat things about our charting platform is that you can come in here and you can set an alert on this. So if I wanted to, I can come in here when it crosses above that trend line. It can send me an email, it can send me a text message, and we're going to teach you and show you how to get all this here today and show you how to do all this here. And the other neat thing about this is that let's just say that right now I'm in a position, let's just say that I felt that right now was a buying opportunity. Let's say I wanted to buy the market right now where it is. Here's what I can do. I can simply come in here and I can actually place an order right from my charts. Do a market buy right there, and we'll teach you. In fact, those of you that are taking advantage of this trial here today, you're going to get the charting platform. You'll get to take all this for a test ride. That's why I'm showing you all this here today. And you'll also get some demonstration videos showing you how to set up your trading account to go on here to be able to trade live right from the charts here. So a lot of neat features that are built into our charts here. Somebody's asking, what are these rectangles up here? These are what are called workspaces. Another neat thing about our charting platform, the neat thing is that you can actually save workspaces. This is my workspace here for the demonstration here today, but I have workspaces set up for each one of these currency pairs that I trade. And what's the neat thing about it is that you can actually save them to the cloud. So if you work on multiple computers, you can save them to the cloud, and you can actually import them from whatever computer you're working on right onto your charts just like that here. So neat thing about this is that A lot of neat features are built in. We have that auto Fibonacci tool. We have our Fibonacci tool, the trend lines, all this is built right in. Those of you that take advantage of the trial here today, you'll get to play around with all this here today. Now, what I just showed you here, some basic analysis, showing you why I'm looking at an opportunity here. If you stick with me to the webinar, I'll actually show you another opportunity that I'm looking at on another one of the 4 currency pairs I'm trading here. But what I want to do is let's come back in here. I'm going to show you something that's even easier. Something you don't have to know Fibonacci's, you don't have to know about trend lines, you don't have to know all about that. I'm going to teach you right now what's called the London Daybreak trading strategy. It's going to be able to answer each one of those 3 questions very quickly during the London trading session here. So here's the second phase of what I'm going to show you here today. I'm going to teach you this trading strategy. It's called the London Daybreak trading strategy. It's going to utilize these 6 currency pairs here. It's going to utilize the Great British Pound Canadian dollar, the Great British Pound US dollar, Great British Pound Japanese yen, Great British Pound Swiss franc, Great British Pound New Zealand dollar, the Kiwi, and the Great British Pound Australian dollar, the Aussie. Now, with this trading strategy I'm about to show you right now, our goal is simply to go after 50 pips per currency pair per day. So I'm going to show you a very simple trading strategy that's going to simply allow you to get onto first base. Go after 50 pips for each one of these 6 currency pairs. So once again, I trade on 18 different currency pairs. We're going to narrow this down even further for you right now. I'm going to show you 6 currency pairs to watch, and I'm going to show you a trade of how to trade around them as well. So let's go ahead, let's jump back into those, our charts again. And once again, I'll pull up, if you stick with me here to the end of the webinar, I'll pull up another currency pair and show you another live trade I'm looking at here. So once again, this is going to be on these 6 currency pairs. The Pound Canadian dollar, Pound US dollar, Pound Swiss franc, Pound Japanese yen, Pound Australian dollar, and the Pound New Zealand dollar. One of the things you're also going to notice, probably you've already noticed, is that each one of these is on a 1-hour time frame. Now, I think Josh is going to show you how to download a workspace for this, download a template for this, but also he'll go into much greater detail in the video here. In fact, that's one of the things I'll explain to everybody is I'm going to kind of give you a Cliff Notes version of all this here. I'll show you the basic trading strategy. You're going to get a live video from Josh where he goes into much greater detail. In fact, let me pull that up and show you everybody here. Where is that? There we go. He'll go into much greater detail in a video showing you in much greater detail how to do this. So you'll actually learn this from the creator of this program. But let's jump back in here and let me show you how to actually do the trading strategy. In fact, the trading strategy I'm showing you right here on these 6 currency pairs, you would have won 5 out of the 6 trades from this morning on this here. So just want to give you an idea of how this works. You'd be up, what, about 214 pips off of this. Let's go ahead. I'll pull it up here after I get done showing you. Let's go ahead, let's jump in, and let me show you how this actually works here. I'm going to use this on the Pound New Zealand dollar. Now, one of the things I want to show everybody is what we're going to be looking for. Let's bring this down and we'll come back in here. During the London trading session, what we're going to be looking for, and I do apologize if I'm going a little fast. Don't be afraid to tell me to slow down. I have enough time here to go into a little detail about this here today. But what we're going to be looking for, and this is if you're not taking notes, this is probably a good place to really start taking notes, especially on this trading strategy. But once again, you'll get that video from Josh where he'll go into more details about this and to help fine-tune this a little bit for you as well. But what we're looking for is we're looking for the initial high or low for the day. Is going to be between 2 o'clock a.m. Eastern Time and 5 o'clock a.m. Eastern Time. Now, what I mean by this is that we're going to be looking between 2 o'clock and 5 o'clock a.m. Eastern Time. We're going to be looking for the market to pull down and either form its low for the day and then rally up, have directional movement going up, or it'll form its high for the day and then it'll have directional movement going down. It's going to happen between 2 a.m. and 5 a.m. Now, the reason for this, it goes back to what I was explaining to you at the beginning of the webinar. There are 3 major trading sessions that happen in this market. You have the Asian trading session, you have the London session, and you have the U.S. trading session. So what you have going on right here is between the close of the Asian session and the beginning of the London session, we're looking for that initial high or low for the day. I'm going to go into a little more detail here and explain to you how we find that in just a second. Now, the next thing we're going to be looking for is later on, we're going to be looking for that opposite low or high of the day. And we're going to be looking for this to happen between 8 o'clock a.m. Eastern Time and 2 o'clock p.m. Eastern Time. Now the reason for this is because you're going to be having the close of the London session and the opening of the U.S. trading session. So what we're going to be looking for is this directional movement to be happening off of the initial high or low, and then we'll be looking for the opposite high or low between 8 a.m. and 2 p.m. Now what we have found is that this directional movement here, I'm going to show you how we capture this here in just a second. We have found that each one of these 6 currency pairs, they have what's called an average daily trading range, meaning that we're going to be looking for each one of these currency pairs to have this directional movement of a minimum of 50 pips, meaning that we're going to be looking for a minimum of 50 pips of movement in one direction or the other, and we're going to be looking sometimes over 200 pips. So we're going to be looking for this directional movement of 50 to over 200 pips during the day. Each one of these currency pairs has had this here. Now, going back, as I told you before just a second ago, my goal is to show you the trading strategy to go after first base. Just go after 50 pips, capture 50 pips per currency pair. I think Josh goes into his videos here. In the video, he'll show you how to fine-tune this a little bit, go after a little bit more than these 50 pips, but I'm just going to show you a very simple trading strategy going after the 50 pips. Now, how much is that 50 pips going to be worth? Going back to what I was talking about before, a micro lot, $20 investment per trade. Each pip is worth 10 cents, so you'll be able to generate about $5 of profit per currency pair per day. You're trading a micro lot account. If you're trading a mini lot account, that's a $200 investment. Each pip is worth $1. You'll be going after about $50 in profit per currency pair per day. And then the big one is the standard lot. Standard lot's about $2,000 per trade from your trading account. Each pip is worth $10. Now you're generating $500 in profit with a standard lot here. So once again, I'm going to show you how to set up a demo account where you can start off trading with Play Money doing this here over the next couple weeks. Then when you want to fund your account, you'll probably start off trading with a micro lot. When you become comfortable trading with a micro, you'll build it up to a mini. When you're comfortable trading with a mini, you'll build it up to a standard lot account. So some of you might be starting off trading standard lots. You may already have a standard lot. Great. But for most of you, if you're starting off, you're probably going to start off trading a micro or a mini to get started here. Give you proper expectation of what we're looking for here. So let's go back in here and let's show you how this actual trading strategy works. Now, I've already come in here, and one of the things you're going to need to know is we're looking for that directional movement between 2 o'clock and 5 o'clock. We're going to be basing this trading strategy off of the close of the 3 o'clock a.m. Eastern Time candle. I'm going to show you, explain here a little bit more detail in just a second what I mean by that. But I've already come in here, I've already labeled each one of these 3 o'clock candles. So for instance, right here, this is on October 7th, 3 o'clock a.m. on the pound New Zealand dollar. Look what happened here. Directional movement coming off of that. We had about, we had about 295 pips. This one right here was about 69 pips. This one right here was about 30, so not as big. Not all of them are going to be winners. We're going to help you to weed out some of them as well. And you see so on and so on. We're getting that directional movement here. Now, why does this directional movement happen? In fact, actually, I just had Alex just ask about that. Here's what we have found. During the London session, it's been said that the European market, it's processing the largest bulk of the Forex transactions. So during this period, you have the banks are processing their orders. What this does, it provides a huge injection of volume and provides a structural movement. So let's go in here, let's show you here how we're going to go after and capture these pips here, how we find out the directional movement here. So let's go ahead, I'm going to start off, we're going to go back about a week, we'll bring this to the live market, and we're going to start off right here. Go back about a week ago, last Friday, oops, here's our 3 o'clock candle from last Friday. We'll bring this to the live market, but I'm going to demonstrate it off of this one right here. So yeah, we're looking for the close of the 3 o'clock a.m. candle. So essentially, at 4 o'clock, you're going to be implementing this trading strategy here. Just want to explain how everybody that works once again. This is a 1 hour candle. So I'm going to zoom in here nice and tight. I'm going to try to go nice and slow and explain to you how this works here. So here's our 3 o'clock candle. Once we find the close of that 3 a.m. candle, we're going to come in, and what we're going to do is we're going to set 2 pending orders. We're going to set 1 pending order 10 pips above the high here. So we're coming here 71, so it's going to be right about there. We're going to set a, excuse me, we're going to have an entry buy order, and that's going to be plus 10 pips above the high of that 3 a.m. candle. So that candlestick wick right there, that's the high point. 10 pips above is our entry buy order. Now we're not in this. This is simply a pending order. We're not in the market until the market actually rallies up and triggers that here. So we have an entry buy 10 pips above the high. We have an entry sell, which is going to be 5 pips below this low. So we're coming here right about there. Make that green as well. Once again, this is another pending order. That's going to be an entry sell. And that's going to be minus 5 pips below the low. And once again, the low is that candlestick wick right there. So step number 1 is we come in here and we set these pending orders. Now once again, Josh is going to come in here. He's going to help fine tune this a little bit for you as well. I'm just showing you kind of a very basic Cliff Notes version of this here. So step number 1, we have our pending orders. Now, if you remember, going back, so I was showing you how to do manual analysis here, we have 3 questions we need to answer. Number 1, where is the market going? That's question number 1. Number 2, where and why to get in, and then where and why to get out. So what I'm about to show you right here is going to answer each one of these 3 questions with this trading strategy without having to draw trend lines, having to draw Fibonacci's, without having to do all that here. So here's going to answer question number 1. Where's the market going? Watch what happens here. 1 hour later, 2 hours later, the market rallies up, triggers that entry buy. So what this is doing right now, this is giving me that educated opinion to look for that directional movement to be bullish, to go upward here. So our entry buy at this point gets triggered, and it now becomes a market buy. So in our broker's platform now, this has just become a market buy, meaning that we now believe that the market's going to be going up. We're looking for that directional movement going up, so we're buying the market. So the first order of business after one of these orders gets triggered is to come in here and cancel the opposite order. We don't want to sell the market. We simply want to buy it here because we're looking for the directional movement going up. So that's answered question number 1. And question number 2, where and why to get in, we're now in the market. Now question number 3, where and why to get, where and why to get in, and then where and why to get out. Sorry about that. So what we're going to need to do is we need to trade with proper risk management here. So what we need to do before we determine where to get out of the market, let's determine what our risk is going to be on this trade. So what I'm going to do is I'm going to come in here, I'm going to set a stop loss. I'm going to come in here and set a stop loss right here at the low of that 3 a.m. candle. Let's make that red. And I'm going to write this out, I'm going to type this out for everybody because it's a little bit different when you're buying into the market versus selling. Stop loss when buying is going to be at the low of the 3 o'clock. We'll just type in at the low of that 3 a.m. candle. So there's our stop loss set there at the low. It's a little bit different when you're buying into the market. So you've been asking why the difference of 10 pips above, 5 pips below. I believe Josh goes into a little bit more detail explaining all this in that last video, so I'll let him explain that to you here. But at this point right now, there's our stop loss, meaning that the worst we can do is that if we end up getting stopped out on this trade, what are we risking on this trade? We're risking about 56 pips here. So what we normally do is, sorry about that. Our stop loss, let's back this up one candle here. So we need to determine what our target's going to be. Now our target, which is also our limit, where we get out of this trade, it's going to be one of 2 things. It's either going to be number 1, it's either going to be a 1-to-1 ratio based on our risk here. So in this case here, we could set it at 56 pips, or number 2, it can be a minimum of 50 pips. Because we would just want to get on first base here. So in this case here, since we're risking 56 pips, let's just go ahead, let's just set our limit at 56 pips here. So let's come in here, oops, let's see here. So 56 pips above here. It's right about, so 1.7258. That's going to be our target right there. So we have our entry, our stop loss, we have our target set. That's the strategy right there. Pretty much just like that. So watch what happens here. 1 hour later, bam, the market rallies up, hits our limit, and we just captured 56 pips off that trade right there. But let's just say we went after the minimum. We just captured 50 pips. Now, if you were trading a mini lot account on that, you just would have made $50 in profit. If you're trading a standard lot, you would have made about $500 in profit off that trade right there. So that was just one trade using this trading strategy here. So that's what's happening when the market, you're buying into the market. Let's come in here. Let's delete all this. Delete that, and let's move this out to the next opportunity here. So let's zoom this over here. I don't have a lot of time left here, but let's just go ahead. Let me show you one more trade here and how this works here. So that was one trade buying the market. Let's bring this over here. Oops. So that's 1, 2, and there we go, 3 o'clock. So here's our 3 o'clock a.m. candle from Monday of this week. Right there, 3 o'clock a.m. right there. So let's just go in here. I don't have a lot of time. We determine the close of that 3 a.m. candle. So let's come in here right now. We come in here 10 pips above this high. So 71.64, 71.74, right there. There's going to be our high. I'll type this out once again for everybody here. Oops. Entry buy is going to equal plus 10 pips above the high. There's our entry buy, and then we're going to come in here. Let's bring this down just a little bit. Oops. And here's our entry sell. And it's going to be 5 pips below the low, so that would be about 94, right about there. I'll type that out as well. Below the low. So just like we did on that previous trade here, 2 pending orders. We're not in the market until we actually get triggered buying or selling. So here's what ends up happening here. Within the next hour, the market then comes down, triggers our entry sell. So we now have that opinion. We're looking for that directional movement now coming down just like that here. So our entry sell is now a market sell, meaning that we're looking for that directional movement to start going down, and we're now actually selling the market right here. So first order of business to come in here, cancel that opposite order. We're not looking to buy the market. We're looking to sell based on which direction the market is now going. Now, we're going to come in here next and set our stop loss. Now, setting our stop loss, when selling the market, it's going to be a little bit different. Our stop loss is going to go 5 pips above the high of that 3 a.m. candle. So we'll come in here right about there. Now I'll type that out. Stop loss when selling is going to be plus 5 pips above the high. Now a couple of you asked about that. Once again, I'm going to let Josh in the video. He'll go and explain to you why it's 5 pips above, that sort of thing. But we're setting our stop loss 5 pips above the high when selling the market. Now, in this case right here, just to make things very simple, let's just go after 50 pips on this one as our target. Just get on first base. And once again, in the videos, Josh will show you how to go after more than the 50 pips on this trade. So 70.44. Yeah, right there. And once again, our target, which is also our limit, it's going to be either a 1-to-1 risk ratio, or to a minimum of 50 pips. In this case here, we're just simply going after the 50 pips. Let's see what happens. 1, 2, 3, 4 hours later, market comes down. We capture our 50 pips once again. So 50 pips. If you're trading a mini lot, you just made, what, $50 at $1 per pip. Standard lot, you just made 500 off of that one. So not too bad. So what I want to do right now, a lot of you asked some good questions here. What I want to do is let's go ahead, let's bring this to the live market. I'm going to show you here how this actually worked on. You can see here some of these other trades happened during the week. Here's where, yeah, some of you have been asking, can we bring it to the live market? I definitely will. I'll show you the trades from last night. There we go. So here is our 3 o'clock a.m. candle from this morning. Let me delete all this. As you can see here, we had directional movement off of that one of 73 pips. So you would have gotten your 50 pips off of that one. Here's the pound Canadian. There's our 3 o'clock a.m. candle. What do we have here? We had directional movement of 96 pips off of that one. So you would have won that one. So we won 2 out of 2. Here's the pound US dollar. We had directional movement off of that one of about, what about 60 pips or so off of that one. So you would have gotten your 50 pips off of that one. So we won 3 out of 3. The pound Swiss franc, there's our 3 o'clock a.m. Directional movement off of this one was about 53. 4 out of 4, and then here's the Japanese yen. What did this one do? This one was about 87 pips. And here's our 1 out of 6 that we lost. There's our 3 o'clock a.m. candle. And the only reason I'm saying that we would have lost this one, because if you're simply using my strategy right here, just simply going straight, what happened here is you would have either been triggered in either buying or selling. In this case right here, so would we have been triggered in buying? Nope, we would have been triggered in selling. So in this case right here, it came down 44 pips, so we would have just been shy of that and then it U-turned here. So yeah, you probably still would have been profitable, but just to be fair, we would have lost 36 pips off of that one right there. So you would have won 214 pips last night off of this here. So the question you have to ask yourself, based on what I'm once again just showing you just a very basic Cliff Notes version of this here. Actually, yeah, Tin just mentioned something here about support and resistance levels. Actually, Tin, that's something that Josh goes into to help you fine-tune this a little bit better in these videos that you'll actually get here. Let me pull that up here. Yeah, in the video, this is the actual video that you'll get as part of the trial to learn about this here. He'll actually go in and show you, once again, how to go after more than those 50 pips. He'll even show you no trade day. He'll show you how maybe this might be a day where you don't want to trade that currency pair based on the trading strategy. I'm just showing you the basics here, like a basics Cliff Notes version of this here. He'll go in, he'll explain to you why maybe today is not a day that you should be trading this just like that here. So here's a question you have to ask yourself. Based on what I just showed you here today, how many of you think that you'll be able to go after, maybe capture 50 pips off of one of these each day, or maybe you'll have 30 opportunities each and every week to go after this here. So that's the trading strategy here. You have 30 opportunities to go after 50 pips per currency pair per day. The other neat thing about this is that as part of the trial here, you're going to get the charting software, you're going to get the instruction video that's going to come with this here, a training video where Josh goes into a little bit more detail about this, showing you how to go after this little bit of a different trading strategy as far as doing this here. What I'm offering you here today is, like I said, it's kind of a Forex starter pack here. What I'm going to do is I'm actually going to give you the charting software here today, let you take it for a 14-day trial. You're also going to get those instructional videos on how to use the charting software. You're also going to get the instruction videos on that London Daybreak trading strategy. So you'll get to take this for a test drive here today. You don't have to be a student of Market Traders Institute to get this here today. You're going to get that auto Fibonacci tool, that auto trendline tool. I didn't get a chance to show you the King's Crown tool. We'll teach you and show you how to email and text directly from your charts, show you how to do demo trading right from the charts, and we also have auto trading as well. We'll go into detail showing you how to do all that here today. So as part of Investor Inspiration, we'll put all this in your hands here today so you can literally get started right here at the end of the webinar, get the charts, go through the training videos. I'll show you here in a little bit here how you set up a demo trading account. So you only have about another 30 minutes left of trading here today. You're probably not going to want to trade here today as well, but on Sunday, 5 o'clock p.m. Eastern time when the market opens, you'll have all this in your hands where you can literally start utilizing that London Daybreak trading strategy, using some of this analysis here of the charts, and you can literally start trading here with a demo account on Sunday. Like I said, it's kind of part of our, what I refer to as a Forex starter trading strategy here today. So as I mentioned before, if you saw Joe here earlier, one of my colleagues, normally to get the charting software, to get access to a lot of this, you would have to be a student of Market Traders Institute. First of all, you'd have to be a student as part of one of our ultimate trading packages, and then normally it would cost you about $249 on a month-to-month basis as a subscription to get access to the charts. But as part of Investor Inspiration here today, we're going to put all of this in your hands here today as part of a trial, a 14-day trial. So if you've been interested in taking our charting software for a trial, going into a little bit more detail about that London Daybreak trading strategy, it's only going to cost you $1 to take it for a trial for 14 days. Even better, if you choose to go beyond those 14 days, we're actually going to get you locked in for an Investor Inspiration special of only $59 a month. So you're not going to become a student of Market Traders Institute to get access to this. You're not going to be paying the $249 a month. As part of Investor Inspiration, you don't have to be a student, and you don't have to pay that $249. We'll lock you in for the 14 days for $1. If you choose to go beyond that, we'll get you locked in for $59 a month. Now, you also get some free bonuses. I'm going to go into those here in just a second. And if you stick with me here, I'll go back and I'll show you that other trade that I'm looking at, one more trade that I'm looking at as far as trading in this market. What I'm going to do, some of you have been asking, well, how do we get that? Let me go ahead. I'm going to send out a link to everybody in the room. In your chat box, you're going to see this link, or if you want to, you can go ahead and just type this into your browser, and it's going to take you to a page here. So let me walk you through the steps before I show you some of the behind the scenes here of all the things you're going to get. Let me walk you through the steps here. Step number 1 is you're going to go ahead and click on that link and register for the trial. Let's go ahead, let's walk you through the steps here. Number 1, enroll into the Ultimate Charting Software 14-day trial. You click on that link. It's going to take you to a page. You enter all your information. You'll probably get an email letting you know that you are in fact registered, and then you'll probably get another email letting you know how to show you how to download the software, all your password information, and that. Starting today and throughout the weekend, you can view the training lessons. You'll view the training lessons for the charting software. I'll pull those up and show you what those are here in just a second. And you're going to get a training video on the London Daybreak trading strategy. You'll get all that in your hands here today as well. Go through that over the weekend, so on Sunday you're ready to go. Now, you can also set up a trading account, live or a free demo account. You can go to fxcm.com. That's one of the ones I use. I use FXCM as my personal broker. Forex.com, Oanda. If you do a Google search for free trading accounts, you might be able to pull up a couple others. I'm not allowed to recommend a broker. I have used FXCM. I have used Forex.com. Some of my colleagues, they use Oanda. I love FXCM. I'll show you here in just a second. I can actually set up a demo account, practice doing this with a demo account. So you don't have to take my word for this on being able to learn how to do this. You set up a demo account, you can learn how to do this and start practicing on Sunday. So yeah, like I said, you only have about another half hour for the market to be open right now, so you're not going to be trading the Forex market here today probably. I really don't like trading on late on Fridays anyway, so what you're going to do is you can start actually practice trading Sunday starting at 5 o'clock. 5 o'clock p.m. Eastern time, the Forex market opens back up. You'll have all this in your hands. You'll have those training videos, the charting software. You'll be able to go through, learn a little bit more about the London Daybreak trading strategy so that literally Sunday night or actually Monday morning at 3 o'clock a.m. You're ready to get going with this here. So what you'll do is you'll try out the Ultimate Charting software for 14 days. Take it for a test drive for the next 14 days. It's only going to cost you $1. Like I said, less than the cost of a pack of gum. You'll get all this in your hands here today. In fact, you'll get to attend a live training class on Friday as well. What I recommend is when you're going through this training here, you go through the trial, if there's some things that you don't quite understand, write down some notes. And then on Friday, when you go into that live training class, you'll be able to ask the live instructor here some of those questions. He'll be able to help you out as far as maybe some questions on how to do different things in here. They'll be able to answer those for you here today. So what I'm going to do is I'm going to send out that link once again. A couple of you have been asking for that link. Let me go ahead and send that out once again. If you're having any trouble with the link, let me know. I'm actually going to walk you through the process right now of going through that here. So that's part of our thing here today. The Ultimate Charting Software, it's a 14-day trial. Let me go through and let me show you a little bit more here of everything you're going to get as part of this here. So let's go ahead, let's pull this back up here. When you click on the link, it's going to take you to this page right here. It's going to go over, once again, everything you're going to get as part of this. Actually, click right here to activate your 14-day trial, enter all your information, and activate your trial right here. Now, any questions you have, it's all right down here. Our disclaimers, risk disclaimers, terms and conditions, cancellation. I'll show you how easy it is to cancel this here in just a second here if you choose to not go beyond those 14 days. But the first step is to go ahead, click on the 14-day trial, get registered for the 14-day trial. Now, like I said, you'll probably get an email letting you know that you are successfully registered for this as part of Investor Inspiration. And then also, you'll probably get another giving you your login information and all the information to get into the back end here. Now, the back end, when you get the login information for this, it's going to take you to the back end portal. You're going to get access to this as well. You're going to get these videos here. It's going to be Josh and some of our other analysts here walking you through, showing you how to set up the demo account, how to get in and out of the market. That's lesson number one. How to get those free workspaces. Josh will walk you through this as well. We'll go over the Fibonacci's. We'll go in a little more detail showing you how to use the Fibonacci's here. And then let's see some of the other lessons here. Some of the other settings on here, the toolbars, using custom indicators. Didn't get a chance to talk about those here today. He'll go over showing you how to use that auto fib tool a little bit better here and how to link your broker, how to link that demo account right to your charting platform. What else is there here? Backing it up, show you how to save your workspaces and all your work, how to actually set up systems. We actually have auto trading systems built into our charting software. You're going to learn how to do that as well. And show you how to set up your system to auto trade, and you can download some of the other things as well. You'll also get that live webinar coming up on Friday. It's going to be every Friday at 10:30. Like I said, take some notes as you're going through this. If you have some questions, you're going to be in a live webinar with either myself or one of my other colleagues here. They'll be walking you through, answer your questions about the charting platform. And as part of this as well, you're going to get that London Daybreak trading strategy, the video here. This is the actual video here where Josh goes in a little more detail, narrowing this down a little bit, showing you how to actually go through this here. Now, as far as canceling this here, you simply click on this link right here. Cancel the charting subscription. If you cancel within the 14 days or per what it says on per the agreement here, you're only going to be charged $1. It's not going to cost you $1 to go through all this here. If you choose to go past that 14 days, we're going to get you locked in for $59 a month. Now, as far as setting up a demo account, Josh will show you how to do this as well, but like I said, I like to use FXCM. You simply come in here to fxcm.com, click on Practice Account. Go on here, click on Practice Account. This is for free. Everything here is for free. You simply type in all your information, click Get Started, they'll send you the information, and then you'll actually have a free demo account. You'll be able to trade with free money, play money here, so you can practice doing this as if you were an actual trader. I highly recommend that, so that's why I'm mentioning doing that here. Let me see if there's anything else I need to mention. Some of you have been asking about that link. Let me send out that link again here. Yeah, if anybody's having trouble with the link, please let me know. I've sent that link back out into the chat room again. So what I'm going to do is I'm going to pull up something else here. You might want to write this down. I'll leave this up here for about 15 seconds. If you have questions, here's our customer service number, 1-800-866-7431. Or our customer service email is cs@markettraders.com. So as you're going through this trial, if you have any questions about this, simply give us a phone call, send us an email. We'll help to answer those questions as you're going through here. So you're not going to be left alone with this. I know we're providing a lot here for that $1, but we just make sure that you do, in fact, understand how to use this here. So one more time to walk you through before I pull up my charts. Once again, I'll show you that other trade I'm looking at here. But step number one is to click on that link for the 14-day trial. Click on that, go through the 14-day trial. You get the video lessons here. Go through those over the weekend here for the charting in the London Daybreak. You'll be able to set up your trading account. I just showed you here FXCM. Go ahead, set that up as you're going through here. Start practicing trading live starting as of Sunday at 5 o'clock. Try the charting software out for 14 days. Attend your live classes. If for any reason this isn't for you, you simply cancel within the 14 days. And you simply have gone through here, taken it for the trial here without having to become a student, without having to go through our full education to get this here. So as I promised, what I'm going to do is I'm going to go ahead and pull my charts one last time. I'll take a minute here. I'm going to show you another trade I'm looking at here. I'm looking at a trade right now on the pound US dollar here. There's another trade I'm looking at. I'll give you another freebie here as we're going through here. So pretty much what we got going on here, I'm looking at this here. This is the pound US dollar, and this is on a 1 hour time frame. Now, one of the things we're going to teach you, if you go through our full education, is we teach you about support and resistance. We also teach you something that's called channeling. Here's what's going on here. The pound US dollar, if you've been paying any attention in the markets here, the pound is beginning hammered. You can see here, once again, we had a huge drawdown here. But what ends up happening is that it came back up, and it's been waving. The last 2 weeks or so, it's just been waving in between these two levels right here. So what has happened recently is it came up, and it's hit the top of this level. So what we're looking for now is for us to keep coming down. It's channeling as it's coming down. In fact, I'll zoom in here just a little bit for you here. So what I'm looking for, in fact, actually I was playing this trade a couple hours ago, and it's pretty much lining up exactly as I had planned. It has come back up, has hit this trend line. So what I'm looking for right now is either an opportunity to sell this down to this level of support. If I choose to sell this, if I get a break here, I'm going to look to sell this down to this level right here, about 83 pips or so. Or if it comes down and I find a U-turn opportunity, I'm going to be looking to buy it back up to this level of resistance right here. If that happens, let's see, I'll be looking at possibly 162 pips as it's going up here. So here's one you want to keep an eye on. It's the pound US dollar. Now the other reason I'm looking at this is right here, we're in the stochastics. Those of you that know about stochastics, we're in the sell zone here. So another opportunity why I might look to sell this as it's coming down, but definitely if it U-turns down here, I'm going to be looking to buy it as it's going back up here. So I showed you what? I showed you, I think it was the US Canadian dollar. I'm also showing you here the pound US dollar here, a couple of the ones I'm looking at here. So I'm going to wrap this up. I want to thank Investor Inspiration. Thank everybody here for joining us here today. I'm going to send that link out one more time to everybody here in the room. Go ahead, click on that link. It's going to get you into that trial that I showed you here today. All the information is also in that back-end portal here. So I think I got everything done here for everybody here. I'm going to send this out one last time. I'll stick around here for about another 30 seconds. If anybody has any questions, if you're having trouble with that link, I already got a couple of you here saying you've been able to get the access to that here. So yeah, Jeremy, I got you down saying you've been able to access that. Alex got it as well. So on that note, I wish everybody the best in your Forex trading. I hope you found some value in this here today, taking that for that test drive here today. So on that note, I'm going to wrap it up. I'm about to go join my weekend here. So thank you, everybody, and thank you, Investor Inspiration, for coming us here today. I wish you all a good weekend and best in your Forex trading.